John Cloud with this update for FTM listeners. First of all, let me say that next Thursday, October 3rd, I'll be doing a webinar with Jerry Robinson on FTM, and hopefully y'all sign up for it. It's 1 o'clock Eastern, noon Central, I think, and you can type in questions and ask me along the way if you want to know. But the last 2 weeks ago, we did this last time. Every question I've had has got to do with, have I missed the boat? Where do I think it's going now? Now that it's jumped up, do they need to wait on it to fall? Do I need to move in now before it jumps up higher? And certainly those are questions that you need to be asking. You're thinking about making an investment and diversifying your portfolio. But let me start with the one where the money manager, he didn't like what I said a few weeks ago, and he wrote in and said that my figures were very misleading when I stated that since 1971, when you could own gold and own stocks, you could always own stocks, but in 1971, you couldn't own physical gold. So since 1971, I stated that gold had gone up from $40 to $1,520 for 38 times. So if you bought gold, held it, and sold it, and there'd be no tax along the way. Now, you would have a capital gains tax when you sell it. But his argument was, I didn't include the dividends in the Dow. So instead of 4.8 times, the stock market's gone up since 1971, we're going to give and say it's 10, including the dividends. It's still 10 times where gold's gone up 38 times. And right now it looks like for the foreseeable future, gold will continue to outperform stocks based on watching interest rates go down and how scared people are about economies. When we see all these new taxes put on by China and back and forth with the U.S. Battling in a war. So metals continue to look like they're better. And no, you haven't missed a big move. Silver's at let's say 1850. So for it to double, it would go to $37. It's been up in 48, 49 twice in history. For the Dow to go from 27,000 to 54,000, where it's never been over 27,000 before, seems to me very unreasonable that that's going to happen. So yes, metals continue to be your core position because they're real, they're liquid anywhere in the world, they're not an evidence of anybody else's debt, and you control it and you can hold it. It's not a piece of paper that just has a bunch of words on it that has no value unless you put value on it. But we've seen all over the world many times when these things become valueless. So I think it's a great time now that silver's up 18% this year, gold's up 17% this year. We're just getting started. We're just getting started. And there is a reset that chief economists around the world are talking about. We will see gold at 6, 8, 10, 12, or $15,000 an ounce, where it's sitting right now at 1,520. So yes, you need to be buying a percentage in gold. Keep whatever percentage you want in stocks. In bonds, I mean, now with the low interest rates, the bond market is now topped. How in the world are interest rates going to go any lower? So if you're holding bonds, today may be the best chance you'll have in the future to liquidate those bonds, because the next time interest rates go up, it's going to be from printing money to keep economies out of recession. And when they print it, interest rates will go up and the principal on bonds will go down. And that's another question we had, that I think bonds were peaking. Absolutely. And I've sold bonds out of my own portfolio, quite a bit of them to be exact. So we'll get into this more if you're able to attend the webinar next Thursday is I'm doing this on Wednesday, 8 days before the webinar. So visit FTM Daily /gold or FTM Daily to sign up for the webinar next week. And we will talk about, we get a lot of questions about self-directed precious metals IRA. We can be your representative, we can be your broker, but we cannot be your custodian. But we can help you roll over that to one of the custodians that we work with. So certainly you can look at that as part of your portfolio, your individual investments and your IRAs investments, and take whatever percentage you want in metals, and you can do it from either place. But yes, I think silver is going to double in the next 2 or 3 years and could happen even quicker. I think gold's going to continue its steady march up. Central banks will continue to put pressure on gold because they're buying it and getting rid of their own paper investments. And what do central banks know that you don't know? They know when this problem hits the fan, gold is going to be the major winner and the major thing, because all central banks know the value of gold, and they will continue to increase their holdings at record rates, and you need to be doing the same exact thing. If you'd like to talk to me or Dan in the office about any of the things I mentioned, you can reach us at 800-247-2812. That's 800-247-2812. We'll be happy to answer any of these questions about the IRA, about U.S. gold, meaning pre-1933 gold that you see a lot about on the internet today. And it is a good buy. I've been against it for several years, but I was right. I was 100% right. It just kept dropping in premium. Now we are seeing it turning around, and it is up off the bottom, and it could go a lot higher on the premium for U.S. gold. $20 St. Gaudens, $20 Liberties, $10 and $5 Liberties and Indians. And we're happy to talk to you about that and get you a price, because we think we're the cheapest out there. So give us a call once again, and we'll happy to go in and talk about any of these subjects we've touched on today. Attend the webinar next week, if at all possible. And we'll look forward to the next update in 2 weeks. Keep the questions coming, and we'll keep trying to answer the questions on this show. With this bi-weekly update, this is Tom Cloud signing out.